is earnings and growth. And so, I look at the earnings numbers and they're just blowing them out of the water. We're having a spectacular comeback here. The economy's on fire. I think we're getting growth in the back end of this year like we haven't seen since the 50s. And so, I have to look at this as a buying opportunity, particularly in tech, where I look at the quarter-over-quarter growth in some of these names like Zoom that got slaughtered.
Dogecoin is surging to the moon again, guys. So be sure to subscribe to my channel and smash the like button. So, on SNL, Elon Musk said it's all a hustle about cryptocurrency and prices dipped. Now Tesla has suddenly become very aware of Bitcoin's energy-inefficient ways and reversed its course on taking payments in it. With the company claiming it's looking for a more climate-friendly cryptocurrency, Musk tweeted Thursday about potentially promising efficiency improvements for Dogecoin. A day after revealing that Tesla Inc. would stop accepting Bitcoin as payment for its cars, Tesla chief executive Elon Musk suggested Thursday that another cryptocurrency, Dogecoin, could be turned into a suitable replacement. Working with Doge devs to improve system transaction efficiency, Musk tweeted, potentially promising. Dogecoin prices immediately shot higher after Bitcoin BT cust 3.08% took a large hit in the wake of Wednesday's announcement. Cryptocurrency is a good idea on many levels and we believe it has a promising future. But this cannot come at great cost to the environment, he tweeted Wednesday. Musk did say that Tesla would not sell any of the Bitcoin owned by Tesla currently, and would use it again as soon as mining transitions to more sustainable energy. In the meantime, he said Tesla will look at other cryptocurrencies that use less energy to mine. While Bitcoin has been seen as a potential payments option since its inception, Dogecoin was largely conceived as a joke. The crypto has seen a stunning increase, however, since Musk adopted it as a meme and began tweeting about it earlier this year, including strong gains last week before the billionaire's guest hosting appearance on Saturday Night Live. Immediately after Musk's tweet Thursday, Dogecoin prices jumped from less than 43 cents apiece to more than 50 cents. As of Thursday night, Dogecoin was up 20% since Musk's tweet to about 47 cents. Musk clarified his comments Thursday, tweeting, "I strongly believe in crypto, but it can't drive a massive increase in fossil fuel use, especially coal." Earlier this week, Musk posted a poll on Twitter asking if Tesla should accept Dogecoin as payment. About 80% of the nearly 4 million votes cast said yes. Coinbase CEO Brian Armstrong said during a Thursday earnings call that the cryptocurrency company is preparing to list Dogecoin on its platform. Investors in mid-April watched as the price of Dogecoin, a cryptocurrency that began as a joke in 2013 and is based on a popular meme, surged 500% over 1 week, bringing the joke Cipro into an unexpected spotlight. "We plan to list Doge in the next 6 to 8 weeks, he said during the call. And then more broadly, we're going to be focused on how we can accelerate asset addition in the future. Billy Marcus, one of the co-founders of Doge, said Thursday that people voted to discuss Dogecoin at Coinbase's shareholder meeting. Armstrong added during the call that Dogecoin has been getting a lot of attention recently. Dogecoin has made headlines in recent months since several big-name celebrities, including Tesla CEOs Elon Musk and rapper Snoop Dogg, brought it up on social media. The cryptocurrency's market value is currently listed at more than $70 billion and is now a top 5 cryptocurrency. CoinMarketCap data shows individual Dogecoins are worth about $0.55 per unit compared to Bitcoin's $51,000. There's more and more assets being created in the crypto economy, Armstrong said during the call. "I think it's going to be something kind of like apps in the App Store on the iPhone, where there's eventually millions of these assets created over time. And so we're putting a lot of work and thought into how do we accelerate our pace of asset addition." Coinbase first went public on April 14 when Armstrong sold 749,999 shares worth nearly $290 million. Thank you for watching, folks. That is all for this video. Be sure to subscribe to my channel and like the video.
Today, Bitcoin prices sink after a U-turn from Elon Musk that one Wall Street analyst called a shocker. Plus, after nearly a week offline, the largest fuel pipeline in the United States has finally resumed operations. And finally, this week's higher-than-expected inflation readings are sparking fears that the post-pandemic economy is getting too hot, too fast. I'm Pippa Stevens, and this is CNBC After Hours. Stocks climbed today as the Dow and S&P each roared back more than 1% after ugly losses yesterday when the Dow suffered its worst day since January as inflation accelerated. Yesterday morning, the Bureau of Labor Statistics released data showing consumer prices jumped 4.2% in April, higher than economists had predicted. This morning, we got another indicator that inflation is heating up. Production prices rose 6.2% from 2020, the largest increase since the data started being tracked in 2010. This economic data reflects what we're all seeing in our everyday lives. Food prices are higher, home prices are rising, and lumber, well, those prices have hit the stratosphere. So how did we get here? Why is the stock market so spooked by inflation? And what do the people in charge of this, aka the Federal Reserve, have to say about these latest indications? The After Hours team asked around for some answers.
When the U.S. slammed on the economic brakes in March 2020, experts and policymakers were terrified of a prolonged recession. The Federal Reserve pumped trillions of dollars into the economy to keep it afloat.
What it's come to right now is so far well in excess of $5 trillion from Congress. Another about $4 trillion worth of stimulus that's come from the Fed.
And despite massive financial devastation to many Americans during the pandemic, others found themselves with unexpected savings, and they spent them. Consumers stocked up on groceries, renters rushed to buy or build homes, and cars became the best way to travel while keeping social distancing in mind.
The past year has been the year of the biggest change in the retail industry and the landscape for the consumer. We call it supercharged change. A lot of the headwinds of the retail landscape that everyone had been talking about for years has now dissipated. If you think about it, people are saying everything's going to go online. People aren't going to go to stores. Well, that didn't happen. Stores only became more essential.
All this demand combined with ample economic stimulus has led to a new concern for economists: inflation.
When you go to the grocery store, when you go to the gas station, when you go to just kind of buy your big ticket items and those kind of things, just basically everyday life, we look for signs of price increases, and that is what we call inflation. What the most basic definition of it is too much money chasing too few goods.
The Consumer Price Index, which measures the costs of a variety of goods in the economy, rose 4.2% year over year in April. That's higher than experts were predicting, and the biggest jump since 2008, the height of the Great Recession. Energy costs surged 25% year over year. Used car and truck prices climbed 21%. Lumber prices, 124%. Costs are rising everywhere.
Home prices are up about 12% compared with a year ago, and they're still accelerating pretty quickly at the fastest pace, in fact, in over 15 years. So what's that doing to the market is you're seeing a lot of bidding wars. You're seeing houses sell extremely quickly, in some cases 1 week or barely 2 weeks on the market.
Inflation is a risk for investors, too.
Stocks return about 8 or 9% a year. That's the historic average. If you factor in 2% inflation,